Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me on, Jim.
Ross, busy week, new budget, new solutions, soon to be announced April home sales. We have Connor from St. Thomas, Ontario asking, we heard Ross talk about London house prices and how the local real estate board there is manipulating prices higher. Does Ross see this pattern continuing through the summer and I guess across the nation?
Well, Connor, if you've been listening to the show, I encourage you to go back over the last year's episodes and specifically, I guess probably March, April, May in that window, because you'll hear during that period where I talked about that this is a once in history opportunity for the Canadian public to see how they've been manipulated by organized real estate throughout their lifetimes. Next week, Connor, next week it begins. This is the culmination of 12 months of misleading the Canadian public, misleading home buyers across this nation, asking over 500,000 Canadian families to make a financial commitment of over 25 years based on the greed of local real estate brokerages. You're going to hear things, Connor, over the first few days of next week, and then well on till about the 17th of the month, that are really going to make you sit up and take notice. Hopefully you'll take notice of our old shows here with Jim on Howe Street. You're going to hear things like sales are up over 400% year over year in April. I know right now in Calgary, the Real Estate Board of Calgary is preparing for an excess of a 450% increase in home sales to be reported at the end of April. That's going to also allow approximately a 20 to 21% year over year house price illusion to be perpetuated or to be propagated across the minds of home buyers in Calgary early next week. Look, Connor, this is how it works. A housing market follows a cycle, and that cycle repeats itself over and over again. The cycle normally is hidden in the way that real estate statistics are delivered to the public from real estate trade associations. Trade associations like BC or B Korea, the Canadian Real Estate Board, the Real Estate Board of Greater Vancouver, the Fraser Valley Real Estate Board, the Calgary Real Estate Board, the Toronto Regional Real Estate Board, because they had to drop their Greater Toronto Realtors tagline from their heading because they don't represent Greater Toronto Realtors. What's going to happen is the exact same thing, Connor, that happened in Vancouver in 2016 that has led to Canadian guys, born Canadians, with Asian last names, having their lives threatened for listing properties in British Columbia. You have a couple of Canadian boys, regular Canadian guys. Parents immigrated here, the kids were born here. Now young men selling houses in BC right now, and they're receiving death threats. They're being threatened with consequences. Why? Because of all the falsehoods that organized real estate has perpetuated on the Canadian public. Look, in Vancouver in the fall of 2015 and 2016, this is going to relate to what you're going to see over the next month and then 2 months, Connor, because you already have watched it happen in your local real estate board, L-Star, down in your St. Thomas neighborhood, the London St. Thomas Real Estate Board. When a non-local buyer enters your housing market and buys a more expensive home than is what is being purchased by the average buyer, local buyer, you get a lift in house prices because of the way that buyer enters the market. Let me explain it to you this way, because I'm going to use Vancouver as a reference, because I'm a little ticked off at how these Canadian guys are being attacked right now. They're being attacked because people like Andy Yan out in BC use the last name to make false claims against Canadian citizens. Oh, the last name indicates that they're from recently here from China. It hasn't been a Canadianized Chinese Asian last name. One of the worst things I had ever heard, and it came from a university professor in British Columbia, a guy that is lauded at times in the press, who in our opinion is a total idiot, and in our opinion is racist when you make statements like that. The consequence is a couple of Canadian guys had their lives threatened just recently in British Columbia because they listed a house of another Canadian. Like, you just can't make this up, Connor. If you had a owner of a condominium in Vancouver that was priced at $500,000, sell it. That owner moved to a townhouse that cost $750,000, and then that owner in the Vancouver townhouse moves to a single detached that cost $1 million. The average selling price for those three local sales was $750,000. Now, if a non-local buyer moves into your housing market and they buy a $1 million home the next month, the average price jumps from $750,000 if purchased by local buyers to $1 million because the buyer was not local. Whether that buyer was foreign or whatever, it doesn't matter. It's a non-local. All of the listeners know I believe Canadian real estate should only be owned by Canadians. So that's not what this discussion is. This is one of math. Basic math. So you have here a 33% jump in average price in 1 month if a non-local buyer buys a $1 million house versus that $1 million house being purchased through a series of sales of local buyers, moving up the property ladder. Now, had the Real Estate Board of Greater Vancouver simply removed those non-local buyers from their sales matrix, put them aside, listed them, made sure everybody could see the houses that were sold, the prices that were made, but they explained to the buyers we're not including them in the sales price matrix because it's going to skew the price upwards for this mathematical reason, the one I just explained to you. Everybody would have said that made common sense. Now you say, what, Ross? Connor, you say, but Ross, you're talking about foreign buyers buying in Vancouver. What's that got to do with London? Well, just bear with me, Connor. Because right now, in British Columbia, you have the Fraser Valley Real Estate Board experiencing exponential house price growth, far surpassing percentage change that was recorded in Vancouver throughout the fall and early spring of this year. Well, why would the Fraser Valley Real Estate Board get this boost in average price that Vancouver did not get? Goes right back to that fall of 2015, spring of 2016 situation in Vancouver. What you have is you have Vancouver realtors drive their clients to Fraser Valley, and because those Vancouver clients are wealthier, they're selling their house in Vancouver and buying a single detached house in one of the locations that the Fraser Valley Real Estate Board covers. It's exactly the same. You have a non-local buyer buying in the Fraser Valley Real Estate Board's trading area. The exact same house price inflation, cause of house price inflation, that happened from foreign buyers buying in Vancouver in the fall of 2015-16 has been taking place in Fraser Valley. And you're asking me, what's that got to do with London? Well, Connor, this is exactly what's going on in London. But in London's case, Connor, you have new builders listing their properties on the MLS, which makes it even worse. You don't get a 30% house price gain in London and St. Thomas, Connor, unless your local real estate board is manipulating the stats, the same way that the Real Estate Board of Greater Vancouver did. Remember, Connor, 500,000 Canadian families bought homes, entered into 25-year mortgage commitments using these false housing market metrics supplied to them by a real estate trade association somewhere in Canada. Because you see, in London, what's happening there is wealthy homeowners from the Greater Toronto area are selling their $1.5 million home, and their realtor is getting them in the car and driving them an hour and a half away to London, Ontario. The buyers are getting out of their car and looking at brand new houses that are $700,000 and $800,000. A house that, if it was bought by a local buyer, would have created an average selling price of around $360,000, now has an average selling price of $700,000 to $800,000, depending on what the new builder is listed it at. The reason why you had a 30% year-over-year house price change recorded by the Greater Vancouver Real Estate Board in 2015, 2016, before those people quit buying and then magically prices fell, is happening in Fraser Valley, and it's happening in London, and it's happening in Halifax. The exact same math. Because when the local real estate board does not remove non-local purchases from their sales price matrix, you get average house price increases that are huge. That magic 30% number that first only appeared in the Real Estate Board of Greater Vancouver has now been propagated across Canada. The same methodology that was used to deceive home buyers in Vancouver has been now used across Canada. Now, here's the problem for organized real estate. This has never existed before. There has never been a singular opportunity to go back over the last 12 months and see how this pattern works. This pattern is now on full display for even someone who is untrained in housing market analysis. I can take you to any real estate board in this country, and I can show you how they have manipulated home buyers in their jurisdiction over the last 12 months in outrageous levels. You're going to hear organized real estate. Well, I saw it today. The Canadian Real Estate Association has already started to move in to cover their rear ends. They're now starting to say, oh, but remember, last year when we're comparing this month's sales, we're comparing it last month when the lockdown happened. Oh, interesting. Why were you silent on that for the last 12 months? Do you realize you're in big trouble? Do you worry that now 140,000 paying members of your trade association could see their entire industry be exposed as a fraud? Because in Calgary right now, what are they going to do next week? Think about it, Connor. Right now, sales are trending at over 450% increase. Prices are now up, supposedly in Calgary, by 21%. Let me say something this to your listeners. How do you debunk year-over-year 20 and 30% house price increases? Well, it's very simple. You get your calculator out, and if prices went up by 130%, you look at a house that is on the MLS, and you divide that price by 130. Then you multiply it by 100, and you have a price sitting on your calculator. Now, you look at that house that you see, and you look at the price, because you have to understand what organized real estate is asking you to believe. They're asking you to believe that last year, at this time, the price you see on the calculator, you could buy that house for. They're saying nationally, Connor, when they say the average price was $716,828 across Canada, their own words are specific. The national actual average home price was $716,828 this year, and that prices have gone up 32%. You take that price, divide it by 132, and multiply it by 100. And the price that you see in your calculator is the price that you should have been able to buy that house for last year. Well, when you look at it, you're going to start laughing. You're going to start saying, this is hilarious. This didn't take place There's no way I could have purchased this home last year at this time for the price I'm seeing on this calculator. It would have cost me a lot more than that. Right, Connor? This is how the con works. This is how every realtor in Canada thinks. They don't get a calculator out and do this calculation. They just listen to whatever their local real estate board tells them, and then they repeat whatever they're told. I just explained to you how a $500, $750, $1 million property chain purchased by local buyers equals $750,000 average price. I also told you that the next month, when a non-local buyer moves into your market and they only buy the $1 million home, right? No price has changed. They just bought the $1 million home. Prices went up 33%. I just explained to you that that's been happening in the Fraser Valley Real Estate Board right now, before your eyes, the last 6 months. I've just explained to you it's happening in Calgary right now. People are buying more expensive homes, and all of a sudden the local real estate board is saying, oh, prices went up. Everybody believes them. I just explained to you what happened in London. Get your calculator out, Connor. They're telling you prices in London are up 30%. Find a house that's $300,000, Connor. Divide it by 130. Times it by 100. Look at the prices on your calculator. Look at the house and see if you could even remotely have found a house at that price point last year. You could not. It's a con. It is a scam. Home buyers in this country do not get any representation at all. The entire industry is stacked against them. And you want to know why, Connor? Why does no one, other than my firm, produce a commission charged to mortgage origination ratio? Why? Why? If there was $19 billion in commissions charged across Canada in the last 12 months, and there was $120 billion of new mortgage debt taken on, that means $20 billion or $19 billion of that $120 billion that is mortgaged and financed debt was commissions. 19 out of 120 of new mortgage debt was solely because of commission. And the GST on commissions, of course. Because people say there's no GST in a resale home. Well, there is. Thousands of GST. It's not on the sale price, it's on the commission that you pay. And since commission ranges between 4 and 6% in this country, coast to coast, depending on what municipality you're in, your GST is on top of that. This, Connor, is why you're going to be hearing what you're hearing next week. Your first thing you're going to hear is the Calgary Real Estate Board reporting sales are up 450%. Cough, cough. Well, excuse us. We've got to compare that against that. It's not really as crazy as what it sounds. Because right now, what realtors are worried about right now, Connor? They're worried about the government squashing them. They're worried about the government shutting the housing market off. But you want to know something, Connor? You ain't going to need the government to shut down the Canadian housing market right now.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, well-known economist David Rosenberg appears to be coming late to the plate, but is now seemingly to agree with your warnings on the outcome of house price correction on the economy. Going back to old shows, you warned about this repeatedly, but only now is Rosenberg discussing it. Why now, and why is he doing it?
Why now? It's because he's coming late to the party, Jim. This is a guy who pretended that he called the stock market crash, if I'm not mistaken. This is a guy who gets breakfast with a David newsletter that the guy sold. This is some guy that everybody looks at. Look, if the guy was this smart, if the guy could forecast this well, he's in the stock market. It's not like me when I was selling houses. It was illegal, Jim, illegal for our family to invest in real estate without telling the person we were buying the real estate from that we were screwing them, okay? If we saw a deal in real estate that we wanted to buy, the disclosure the full legal disclosure requirements, which is the only way that we did business, required us to tell the buyer, the owner of the property that we're buying, why we're buying it, how we're buying it, and how much money we're going to make up off the purchase. Of course, nobody's stupid enough to sell you a house if you go through this whole process. And how could you ethically do that anyways? If you knew how the housing market is functioning, and you're legally not allowed to tell buyers that was going on, because up until 2005 in Ontario, you really couldn't do that. We had to formulate workarounds to do that. I would have looked at real estate totally differently. But in terms of the stock market, there was nothing stopping David Rosenberg from managing huge ETFs. Nothing stopping him. So if his forecasting was so right, why is he not managing an ETF? If you go back to Howe Street in January of 2019, okay, over 2 years ago, I'm looking at one of the headings, and could housing downturn cause a recession? ? And in that show, we explained to people how every recession is first recorded in the housing market. So before a recession hits GDP, it hits the housing market. You just don't know that it's hit it, because the housing market is a huge freight liner. It's like the Titanic. It starts to slow down before anybody even knows what's going on. If you're reading the housing market from the buyer's perspective, then you can see when the housing market starts to cool. The more speed that a housing market has of velocity, the longer it takes to slow down. So the way further advanced that you have, that slowdown is going to finally be recorded on the speedometer. If you've chucked in a whole bunch of coal into the boiler of a steam locomotive, it takes a while for that engine to get up to speed and for the engine to reach its top speed, even after you quit putting the coal in. Then it continues on that speed as the coal's burning down, but the momentum is already there. And even if you don't add another chunk of coal to that locomotive, the engine just keeps going and going and going until it finally stops. You look in July. We took 2019 twice. There's number 2. In 2019, 2 years ago, we talked about the consequence of the housing market slowing down. Okay, we talked about the consequence of mortgage debt decreasing. You've got a choice. You got a choice, we said in that episode. You can either take a recession, or you can accept that you're going to have to take on more mortgage debt to keep it going on. We then had a third instance. Look at this. July 21, lost equity, poor housing sales equals recession. Then we had a third instance, if I'm not mistaken, which was in December of 2019. 3 times in 2019. Now, obviously, if I'm going to come on this show and say that, we're recording that the shovels of coal are not going into the steam engine. We're recording that. And that was being recorded as we entered the lockdown of last year. December 3rd, 2019. Canadian mortgage debt or a Canadian recession. Take your pick. There's nothing you can do about it. We have an industry that by its own natural design, every family needs a roof over their house. Every family wants to move up the property ladder, move into a nicer, bigger house, a house with more features, a house which affords you a better quality of life. Maybe you want a house with a backyard. Maybe you want a house that you can put a swimming pool in. Maybe you want a house where you can grow a garden. Maybe later in life you're going to trade down. You're going to move into a luxury condominium. This is simply how the property ladder is followed. We had a lockdown happen last April. We had a lockdown happen when there were 104,000 families who had sold their existing home and hadn't purchased their next one. Now, you don't see this metric, people, out in the public anywhere. You don't see any demand side metrics other than the opinions of some inexperienced real estate brokerages. We measure demand in the housing market, and we knew by the end of May of 2020, there were 104,000 families who had sold their existing home and hadn't purchased their next one. Oh, gee, Ross, those are trade-up buyers. Oh, gee, Ross, what type of homes are trade-up buyers going to be buying? I'll bet you they're going to buy more expensive homes. And from May forward, what happened to the average selling price? As reported by your local real estate trade association, it magically jumped. Well, of course, the houses, the prices didn't exactly jump month to month, but what did jump was the expense of home being purchased by home buyers in that month. We were at 104,000 families as of the end of May were homeless if they didn't buy their next home. And then CMHC comes out and forecasts a house price collapse. Clearly, CMHC doesn't understand how you measure buyers. They don't understand how you read real estate transactional data to get an actual count of the number of families who still have to buy a house, because if they don't, their family's going to be out in the street. A housing market, if it slows, is going to cause massive damage to your economy. Economies that are driven by household consumption. Household consumption, which is fueled by wealth. Wealth gains, which are fueled by home ownership wealth gains. This has been the way it's been for 40 years. This doesn't take brain surgery to figure out. It just takes some common sense and a basic fundamental understanding of how the home trading market functions. How that market functions, the Canadian public interacts with the economy. It's that simple. So to come out now when house prices are being announced at 30% year-over-year gains in these small municipalities because of non-local buyers and not explaining to the public what's going on only exposes your own ignorance. The reason why, as we said at the last station, you have a couple of Canadian guys getting death threats because their last name is of Asian origin, who have been subject to great hardships because of people like Andy Gann, Tom Davidoff, everybody who blames foreign buyers for everything. When where the real blame lies is your local real estate brokerage trade association. The reason why this recession is going to be as bad as it is because of your local real estate brokerage trade associations. No other reason. They utilized a market dynamic, non-local buyers, and pent-up demand of homeless Canadians, previously owned, currently homeless, or heading homeless Canadians, who are purchasing more expensive trade-up homes as they move up the property ladder against the Canadian public. And the proof of that against you attitude is recorded in the mortgage origination debt. $19 billion of real estate commissions and GST component out of $120 billion of new mortgage debt originated over the last 12 months. Apparently, another strange metric that only one corporation in Canada, one firm in Canada has access to. Oh, these guys have just got to be geniuses. They've just got to be just amazing. No, folks, it's common sense applied against the knowledge of how the home trading infrastructure operates.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, Bob from Burnaby, BC asks, with the qualification rate set to increase and CMHC revising the home buyer incentive program to broaden its reach, what impacts do you see those two changes bringing to the BC market?
Well, we can just discuss the whole Canadian market, Jim. Bob, I don't need to just discuss the BC market. I'll just discuss this because it goes coast to coast. First of all, CMHC change really is going to impact Victoria, Vancouver, Toronto. Now, again, they use those terms. Those terms are incorrect. It's the CMAs that we're talking about here. So this is the same way that you believe crazy statements about house prices in Toronto or Vancouver because of the terminology is not precise. So let me clear that up to start out with. So the CMHC rule is going to go from Toronto all the way out to where I am here in Burlington, Ontario. Okay, so the entire GT market is being covered. What this change is basically, they're going to try to con people into letting CMHC get a share of your equity gain. Now, I will tell you that there is going to be a period here where you could really mess up CMHC. In other words, you can actually utilize this to offset some risk in your housing purchase, equal to the limit that CMHC will provide to you for a down payment. So there is a way to strategically capitalize on this CMHC policy, which shockingly, once again, we don't hear reported anywhere in Canada. I mean, it only makes sense, folks. You don't have to sell the property to repay the equity share that CMHC has. You only have to reward CMHC if your price has gone up in value when you repay it. If you see your house is going to increase 10% in the next year, in some cases enough to fully pay off that CMHC shared equity loan, why not just pay it off now and you take all the profits yourself? Why give CMHC half of the profit? Also, on the way down, if you're buying into a market and you say, house prices could drop here, I'm getting advice where the housing market forecast is set to drop this certain percentage over the next number of months or a year or so. Why don't I let CMHC take some of that loss? Go ahead and let them do it. All you do is, after they've taken the loss, which is the very best time really to pay off these shared equity loans, is when the loss takes place, because then you remove CMHC on the upswing of the return of the market. And anyone who studies housing markets, anyone who has actually studied housing markets, I don't mean someone who goes out there, looks at a few charts, a few graphs, reads a couple of articles, and then comes up with, this is what's happening in the housing. No. Someone who actually understands how the entire home trading infrastructure works, how every single word of a trade association press release is designed, how every single housing metric is a myth, how the home buyers are totally misled by organized real estate. Someone who studies all of that information to tell you, hey, your house is taking a 5% loss. Why don't you get out of that CMHC mortgage right now and let them take half the loss? Seems pretty smart to us. How come no one else is recommending that as a strategy? If you're listening to the show, why has this not been public knowledge? Why has the risk to CMHC, in the way I just explained it, being explained to the public? The CMHC, if you go to the CMHC website for this, the new update of the calculator, Bob, it's almost as bad as when they first released it. Remember when they first released the online calculator for this, it showed crazy prices that you could buy houses at. After we caught them with a faulty calculator and we exposed it through social media, CMHC went back and changed all their calculators. But the screen captures from all those calculators are still available. And now they have today, where they have it laid out so when you go there, it looks innocent. It looks like it's really to your benefit. And it's not. It's a scam. They believe they're gonna reap hundreds of millions of dollars from this. If you look at what they have set up in the calculator itself, that's what the calculator is actually telling you, if you understand how the numbers all work. They're not saying, well, wait a second, if the housing market corrects, we're in big trouble here if a whole bunch of people take up this 5% equity share mortgage. Now, luckily for most Canadian home buyers, they're not stupid enough to team up with CMHC to let CMHC get part of the equity in their home. Mortgage qualification rate. The only reason the OSFI is updating the mortgage qualification rate from 4.79% to 5.25% is because it should already be at 5.25%. The mortgage qualification rate should have already been there. But what the banks did, they changed their marketing strategy when the OSFI launched this first mortgage qualification rate rule. Instead of raising the rates on the posted rate, they kept them where they are, and they reduced the spread between the discounted rate and the posted rate. The OSFI had no idea the banks would be this unethical, this greedy, would be this manipulative of the Canadian public. We warned them that this was going to happen. We asked for a variable gross debt service ratio to be rooted at 5.39% mortgage rate. Well, magically, what's happening now? 5.25%. They changed from the current rule, 4.79, and they're going to increase it to 5.25, a mere 0.14% less than what we asked for a variable gross debt service ratio to be authorized at. When we first went to the OSFI, we asked them, why are you still lending on a 39% gross debt service ratio on a methodology that is rooted in 10% mortgage rates? Because the 39% maximum gross debt service ratio was rooted in 10% mortgages when the average Canadian wouldn't borrow on behavioral patterns over 34%. Most were between 30 and 32. In other words, the thousands of houses that we sold, I would be hard-pressed to remember a single buyer who purchased over 34% gross debt service ratio, because you don't do that when you've come from a world of high interest rates. The banks use the ignorance of the OSFI in terms of how their knowledge of how the banks' greed to build shareholder profit manipulate Canadian homebuyers. Well, obviously, they're up to speed by now. So we don't even need to argue about the mortgage qualification rate anymore, because we're not going to argue over 0.14% variance. Now, the reason why we set 5.39% is because there is a structural function of that interest rate built into the Canadian home trading market. The behaviors of Canadians are centered around that foundational build of the market. It's not worth arguing over 0.14%. That change is not going to impact the market rate now, where the previous change did. Remember, they instituted first the mortgage qualification rate, which cut out first-time buyers. Okay, get your calculators out, kids. If you cut out first-time buyers who are buying cheaper homes, and you only allow wealthier people to buy more expensive homes, the average price goes up. Even without the prices of houses actually changing in a month, the average price goes up, which the realtors then use in turn to list the next house at the higher price. Oh, prices are up 6%. We got to list your house 6% higher. Everybody looks on the MLS. Oh, housing prices are up 6%. Everybody believes it, and the story goes on for the next month. The pattern repeats itself over and over and over again. If you can't use one statistic to support your argument, you're going to pull another stat out to support your argument. Ironically, not a single stat has been released in the last 10 years to support buyers have a better understanding of the housing market, has there? You haven't heard one real estate trade association in this country come forward and say, hey, wait a second, don't get misled by this month's data because it really isn't telling you the real story. What this month's data is really doing is we had a whole bunch of houses that were built by a new builder at the top of the price point, $1.2 million, and those houses got listed on our local real estate board, and home buyers from all of the neighboring communities, seeing these great deals, went and bought these expensive houses. And because they're non-local buyers, the average price jumped because there wasn't the lower priced homes that are normally sold to support that more expensive home being included in the sales matrix. You didn't hear that once. You didn't hear anything. I'll go back to the first topic we discussed today. Next week, as your local real estate trade association begin to release their housing market statistics, it's going to catch up with them, folks. The day of reckoning is here. You are not going to cover up a 450% year-over-year increase in sales by saying, oh, but, because everybody needs to ask, Where were the buts the previous 12 months? Where were the buts last April when the average national selling price was only $488,000? There were no buts then. So when the Canadian Real Estate Association releases the middle of the month, what's the but going to be when the average selling price is over $700,000? A $240,000 year over year. Do you know what the jump that is, folks? House prices could actually be reported by the Canadian Real Estate Association as increasing 50% year over year. Get your calculators out. Look at the houses on the MLS. Multiply them by 50% increase. 50% increase, Ross. Yeah, 50. Divide them by 150, multiply by 100, and see if you really could have purchased that house for that cheap last year. And you'll know you couldn't, because you were watching the MLS last year, and you know exactly what you had to pay. And if you're lucky enough to live in a city where there's a sold site, you can go back in on the street where this house you just calculated out and see how much they were selling for. Go ahead. Find me a single city, a single street in this country where you can prove a 50% year-over-year gain in average price, where a house has gained 50% in value year-over-year. Because when they release in the middle of April, unless they totally change their reports, they change their wording. Of course, they changed the wording last fall. It's totally different wording last fall in the spring than it was the previous fall and spring, by the way, folks. There's no way of covering this up, though. There's no way of covering this one up. The average price in April very well could be 50% higher than what it was last year. Now, if it's a but, where were the buts over the last 42 years? Where were the buts the last 42 years? Because the same buts that they would have to use to offset these crazy gains they're going to have to report should have been used every single month for the last 42 years. And they think they're going to survive this one.
Ross, it looks like you like big butts. Thank you. Thank you so much for being on the show.
Thanks a lot, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, he loves to answer them. You can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.